VC is an important industry. I'm not by any stretch saying it's not an important thing. And I do think there's a skill set for folks that do at this stage. But I think our industry is going to change because of AI. And I do think at some point we need to find a way to open it up a lot more so it's efficient for companies.
Good morning, good afternoon, or good evening, depending on where you're listening. Welcome to AI and the Future of Work. I'm your host, Dan Turchin, CEO of PeopleRain, the AI platform for IT and HR employee service. Hate to start an episode with an apology, but as loyal listeners can tell, I lost my voice this week. But we will play through the pain. It's what we do. You're loyal enough to listen, so I am certainly loyal enough to bring you a great conversation, even with a raspy voice. Community is growing. If you haven't yet, sign up for the weekly newsletter. Great opportunity to learn some fun facts and tips and some clips from the guests that don't always make it into the main show. There'll be a link in the show notes. Of course, we are all in this together. Our community is growing, all thanks to you. And if you enjoy today's show or any other, pay it forward. My ask, share it with just one friend. They'll know that you care about using AI to make humans better. And if someone you know shared this with you, tell them thanks and let them know that you've shared it with someone else. If you leave a comment, of course, I may share it in an upcoming episode like this one. I love this one from Trevor in Boston, Mass, who's a financial analyst and listens while taking the kids to school. Trevor's favorite episode is the one from the way back machine with Paul Lee, co-founder of Synesis One. It actually was from season 3 about using games and blockchains to harvest data for AI training. Prescient, that one was. Synesis One is still doing very well. Really fascinating conversation. Thank you, Trevor. We'll link to that in the show notes. We learn from AI thought leaders weekly. Of course, the added bonus, you get one AI fun fact. Here it is for today. Lucas Ropek writes in Gizmodo that Mark Andreessen, the A in renowned venture firm A16Z or Andreessen Horowitz, says one job is mostly safe from AI, namely his job, that of a venture capitalist. In it, Ropek cites a recent podcast interview with Andreessen, who describes his job as a nuanced combination of intangible skills, including psychological analysis of the entrepreneurs he works with. He says a lot of it is psychological analysis like, who are these people? How do they react under pressure? How do you keep them from falling apart? How do you keep them from going crazy? How do you keep yourself from going crazy? You end up being like a psychologist. So it's possible. I don't want to be definitive. Again, this is Andreessen speaking, but it's possible that it is quite literally timeless. And when the AI is doing everything else, that may be the one last remaining field that it won't impact. Of course, we'll link to the full article in today's show notes. My commentary, there will always be ample funding for insanely ambitious founders building insanely great products for insanely large markets. And there will always be insanely large market opportunities because the world and our needs as humans are constantly evolving. Mark's trademark arrogance aside, the way he describes how the role of a venture capitalist is future-proof is how we should all describe what we do. Some jobs are at risk of obsolescence due to automation. But if you find a passion, infuse creativity and critical thinking into everything you do, and always seek to deliver more value than is expected, there will always be a need for whatever you do. Fear not. The bots are not here to take your job. Now, shifting to this week's conversation, Jim Curry is a co-founder and CEO of BuildGroup, the venture firm based in Austin, founded in 2015, that has raised $330 million and invested in great companies like Anaconda, which I should note just raised $150 million at a $1.5 billion valuation. Congrats to Jim and the team, as well as Vidmob, DigniFi, and Benefitfocus. Jim has spent more than 20 years as a product strategy and corporate development executive at companies like Rackspace and Dell. He also co-founded OpenStack, one of the first and most used open source cloud computing platforms. Jim's on the boards of Generation Serve and the University of Texas School for Undergrad Studies. He's a graduate of UT Austin, Hook'em Horns, and Harvard Business School. Without further ado, Jim, it's my pleasure to welcome you to AI in the Future of Work. Let's get started by having you share a bit more about that illustrious background and how you got to where you are.
Dan, thanks for having me. Your voice sounds great. You're charming at least, even if your voice is kind of going out. And I want to come back to Mark's comment about VCs at some point. I think it's a really good one. Yeah, so my background is I'm a native Texan, grew up in Texas. I was lucky to be raised as a son of a NASA engineer. My dad joined NASA in 1960. And because of that, I got my first computer in 1978, really became in love with technology. And then somewhere along the way, I kind of lost my track and decided I was a little bit more focused on money. I have a whole story around this I always talk to undergrads about, but I ended up deciding I wanted to be an investment banker for a very short period of time. And I was neither good at it, nor did I like it. And so after I got out of school, I worked for Goldman for a couple of years, left that, and then went to do a startup. And that really in the dot-com area, and that was a company called Bow Street, which was a company called Tivoli back in the day, was bought by IBM, founder of that. That really started my love for technology. And then had a really, really fun ride with Rackspace. For people that are in there and above, probably all remember Rackspace. Younger folks don't remember it quite as much, but we were obviously initially a web hosting company, but we morphed into a cloud company with the launch of our cloud in 2007. And for a while, it's funny to say now, we're running alongside Amazon for a very short period of time, which a little bit led to the OpenStack development. I worked on that as a way for us to sort of compete. And then 2015, my partner Lanham, who was the CEO, I ran product and strategy, decided that we wanted to build a new venture firm. And I think like a lot of people say who are operators turned venture capitalists, try to take our own take on it as operators. And our take on it was pretty simple. We had great backers. And I probably shouldn't mention all of them, or in Rackspace. And Doug Leone, sorry. Doug Leone.
I remember Sequoia. Yeah, Sequoia.
Yes, I'm sorry. Yeah, sorry. It feels like a Saturday morning to me, and I'm drinking my coffee as I go. But Doug Leone was in our company. They were really great backers. But one of the things we learned as operators is, especially early stage firms, they don't have a whole lot of time to provide help. And every single thing I did at that time in my career was new to me. And I didn't have a lot of guidance. I sought out a whole lot of mentors to try to help us through it. My partner, Landon, would say the same thing. When he became a CEO, didn't get a whole lot of support. And so when we did this, we said, look, what we really want to do is we want to rely on our strengths. We've been operators now for 20 years in technology companies. We scaled from single digit millions up to billions. And in order to do that, we need to make sure that we have the time to focus on these companies. Right? We can't be on 50 boards. We have to be on a limited number of them where we can engage with the companies, not just on a monthly basis, but literally a weekly basis. That formed BuildGroup. So BuildGroup was set up. The idea was we raised a permanent fund, $330 million. We can hold things for as long as we want. And I can talk through the benefits of that if you want to talk more about it. We have recycling built into it, so we can continue to invest out of this fund forever. But the main thing is we ran a really concentrated portfolio. And for the partners who are involved, we have another partner named Clee Kleber, who is our chief marketing officer. He's been the chief marketing officer at a bunch of great companies, VP Engine, for example, in Austin. We basically never had to work on more than 2 to 3 companies at a time. And really we're focused on how do we help in between the board meetings to build those companies up. And so you mentioned some of the companies we invested in. When we started in 2015, we had a very simple thesis, which was workflow SaaS companies that were transitioning to data-enabled SaaS companies. So think about those companies that recognize that their workflows generated really unique data assets. And instead of just extending the workflow, they decided their objective was to surface insights back into the people and machines that were using it so they can make better decisions. And we had a company called Fix Automation, which was in this space for basically for maintenance departments at manufacturing companies. And they transitioned from being something you used to track trouble tickets and track machines to one that offered insights on how your team was performing, gave you an idea when you likely were going to run out of parts, all kinds of different things. And we really saw, as an example, we saw usage on the products explode. And that was the whole thesis, which is when you go from being just a workflow tool to being something that people actually use to help make better decisions, not only do you increase the stickiness, you increase the willingness to pay. And we saw that substantially with a couple of our early companies. Now, what was really interesting was if you go back to our initial deck, you're going to ask me to prognosticate, and I'm a terrible prognosticator. But we did have AI in our deck. And I think what I said at the time was, we'll be ready for this in the 10 to 15 years it'll take for it to be relevant. So could not have been more wrong about that. But what worked out really well was we had a great set of companies who were at their core workflow SaaS companies with great data assets that were focused on insights, and AI fit right on top of them. And because of that, we had a couple of really great companies exit as well. Another one was called Case Text. It was in the legal tech space, sold to Thomson Reuters. And another company called Amelia, which was in the voice AI space and automation space. And it sold to SoundHound, which is a public company last year. So we got a good thesis. We lucked into a lot of it in the timing perspective. I never would have imagined AI was going to evolve as quickly as it did. But that's what we've been building. I'd say that for me as a VC, I was a really crappy VC starting off. I think most operators are. I've read a lot of comments about this where you have to recognize it's not your company to run. You're there to advise, and it takes a totally different approach. I never liked the term coachable founders. I like it, the idea of like who actually wants to work together to make a better decision. And I've never found a really good term for this. But I found out how to be better at working my job by recognizing, number one, I'm not on the hook for day-to-day deliverables, but I do have the luxury of being out in the market and being able to offer really good strategic insights. And for that person that's in the middle of, I have to make things happen day-to-day, deliver results, help keep them on the right strategic path. And so I think we've gotten a whole lot better at VC at doing that. And then the last couple of years, I've been super focused on the operationalization of AI in companies. Right before this call, I spent a couple hours with one of our companies. We're doing a lot of work to automate demos and do some different work. But I'm a big believer that we can learn from what's going on in the startup world today with brand new startups who are scaling to large sums of revenue with small number of people. I think there's a real opportunity to go back and retrofit much of that on the existing SaaS world, but not just on the cost side. I think it's really on the go-to-market side that's most interesting and where I'm spending most of my time. So that's a lot, but that's kind of my background and where I'm spending my time right now.
So you teased at the beginning of that answer, so I got to give you ample opportunity. You heard the comments from Mark Andreessen, and you just shared how you've evolved as a venture capitalist. What, if anything, can Jim Curry do that AI cannot do now and in the future?
Well, I think what he said is true. I mean, I think as an operator, one of the things I say, and Mark falls in this category too, right? Because he's a former operator. I think one thing that we all have strengths are in this is we've managed teams, we built teams. We're good. If you're a good manager, you're a good read of people, right? And I do think humans are uniquely situated to judge. Now, I will say some of the comments he made, I don't know if I 100% agree with about what capabilities. So, for example, I'm playing around a lot with AI SDRs and what can they determine. The one thing I'll say about it, if you want to do some comparisons between agents and humans in this situation, there's no incentive challenge, right? A typical SDR is incented to get a lead to an AE so they can get paid. You don't have that problem with agents. Agents are actually relatively good at objectively listening for intent on where folks are. I've been surprised at what it can read about what a customer is saying. So I think I don't want to say it's good at reading emotions, but it's good at reading signals. In some ways, better than a very junior SDR who probably is right out of college and isn't as good at doing those types of things. So, I do think there are things that it's getting good at reading people. I experiment with it and how I have it look at our teams. So, a lot of people talk about AI it summarizes documents, right? I ever want to know, I do the same thing. I get documents now. I've built agents that I use it to parse out data and read. But I also spend a lot of time really asking it about intent. What do you read about what they're saying? What do you read about where they're trying to be positive or trying to potentially cover up an issue? I use this on my own team. My own team writes a memo. I actually try to read it for emotion. So I do think that that part is really true. What I think Mark said that was wrong, and I think I disagree with, is I think we are near the stage where probably the only venture capitalists that are going to be needed are very early stage VCs, and people like me are not going to be needed, the later stage folks, because I think we're going to be at the point where you can grow and scale with minimal cost. And now I'm optimistic about that. It's not proven yet. I mean, there are some startups that are obviously doing that today, but I do think that it will, first of all, I think it'd be great if we could be in a world where where essentially the founding team can own the company and doesn't have to sell to a person like me, hallelujah. I think that's great. And would celebrate that. But I will tell you what, we're doing a lot of work with our companies. And as I see these emerging companies, I think people who do Series B and beyond are going to be in trouble. I certainly think the volume is going to come way down over time. Now, I don't know about seed stage. I think you're going to always need people to help get things started. So Andreessen on the early stage of stuff, I think is going to be fine. But I think these later stage funds are going to be going to find real difficulty. Whether that's in 3 years or in 10 years, it's hard to say, but I think it's coming.
So you and I as entrepreneurs are obviously never going to pitch to robot VCs. So I think the point you're making is the whole notion of VC goes away. Or that, or perhaps, I don't think this is the point you're making, but one step further is human entrepreneurs will go away. And a real dystopian future is that bots are pitching bots to raise capital, which I'm not sure how the bots would know how to deploy. But just across those two scenarios, kind of unpacking your reaction to Andreessen, what do you envision happening to the VC industry?
Yeah, I think over time you're going to see rounds start to. It's hard to talk about size, right? Because I think reading all the data out there, there's some really big funding rounds happening today, and I don't think that's the right way to judge it. I just think the percentage of companies overall and the percent of logos that are going to need to raise a Series B, a Series C, a Series D is going to gradually go down as these tools get more mature and people are able to grow without adding a whole bunch of incremental costs through essentially people as they go forward. Now, again, I don't know when and how that's going to play out, and it's certainly no one's seen it today. But I do think it is coming. And we say we aren't seeing it today, but there are plenty of startups that are now scaling without having to raise money. And by the way, it was always possible to do at pretty low scale. So if you look at Rackspace as an example, we were a hosting company. We built data centers. We had to fill it with equipment. We had to train people. I mean, it was a very intense cost. We had a very good model. Our gross margin payback at one point got down to 6 months. I mean, so we were really effective at how we ran our model, but we only raised $28 million before we went public. And that was just kind of getting started. And so, but we were a 50% grower. We were never, necessarily a hyper grower, but you grow 50% compounded over 20 years, you get to a really big number. So I don't know, what I think's changed is, now you can potentially grow 100 or 200% and also be capital efficient. And essentially that's what I'm working on with my companies right now, which is like, okay, as we're starting to look at this, how do we go through and start to continue to grow at a good pace, but do that with essentially no marginal cost? And, like anything, there's a lot of stuff where we have to figure out about this. The initial go-to-market model that Salesforce invented, predictable revenue model. Right now, all we're doing is trying to mimic that with AI and trying to improve on it. But it's going to fundamentally change, and I don't think we know yet. I've got some ideas on how it's starting to change, but that whole model is going to change. So you get back to your original question. What I think is going to happen with VC? I think the volume of later rounds is going to go down. I do think early stage VC is going to still be in a good spot and still going to do exactly what they do today: evaluate teams, evaluate markets, and go after it. And then, there might be more of a PE boom because potentially what's going to happen is you're going to have a lot of privately funded companies that just, want to sell to PE, and you'll see a lot more of that go up. But I think the mid-market VC, I think that market's in trouble over time, for sure.
Let's start with the premise that innovation requires capital. Maybe, perhaps, as you indicate, less than it has in the past. Definitely believe that. Might there be a time when the innovation represented by the entrepreneurs could get matched to the capital via, let's say, a public exchange? It's automated on a blockchain. Maybe it looks like a Circle or a fill in, Bullish, etc. And might that actually be the thing that disintermediates the need for the traditional venture capital role?
Oh, I think that's a great insight. And in fact, I worked on this really early on. I had an idea of sort of trying to create a sort of open data movement that would allow private companies to share their data in an anonymous fashion so that they could be matched with VCs. Let's be honest. The only reason that doesn't exist today is because my industry doesn't have an incentive for it to exist. And I think it's terrible. And I would be the first
you said
to help. Yeah, I think it would be, this constant proprietary deal flow is kind of disgusting to me. I don't want anyone to feel like they only have one option. I'd like them to choose the right partner for them. And as I tell every company that we talk to, my number one objective is for you to get what you want. Whether I get what I want doesn't matter, right? It's really about trying to get you guys funded. If I'm the right partner, great. If you don't need the money, great. And, the check size question is always my other favorite one, which is like, what's your minimum check size? You should never ask that question. You should raise the minimum amount of money you need, and you should ignore what I want to put to work. So I do think that it exists, and the opportunity exists to make that happen. And I'll tell you what, Dan, if you want to organize it, I will join it and help out on it. Because if you could, unfortunately, it does. The idea of the open data movement was it does require some ability to put information about a company out there so VCs can evaluate it and get an idea. But imagine if you could then get an anonymous match saying, hey, these 5 VCs with this profile are very interested in chatting with you, right? I think there's a lot of way to do that. But, this old school way of still having to reach out to people on email or go through a network and do all that to try, it is ridiculous. And it only exists because my industry thrives on friction.
Jim, it's that and these antiquated definitions of accredited investors. Anyone can go and put it all in red in Vegas.
I know.
But you're not trusted to make your own investments because of some arbitrary,
I 100% agree with all that. Those rules are ridiculous. And it's not like now that, if you just look at even how our funds are regulated, they're pretty tightly regulated in terms of what we can share. You could make some very basic changes to what private companies have to report to also make it safe for folks. But I think the better way to do this would be, number one, create a much more liquid market for these things by allowing some easier matchmaking in the industry, and then make it so the average investor could invest with us, through us, and probably need to fix the 2 and 20 model too to make it economic for most folks. I think that model is also...
That would be a byproduct, right? The market would take care of it. Yeah. I mean, if we could use smart contracts on a blockchain, frictionless, right? So the 2 and 20 goes away.
Well, imagine if retail could actually get into our industry and you had to compete for those dollars by thinking about what the right fees are, right? And how do you kind of go about structuring something along those lines? You could really change it. But again, to your point, friction exists on both sides of this. It exists on the investor side. It exists on the side in terms of the matchmaking. And it does need to change. Now, can AI help with that? Sure. But I don't think that's the fundamental problem right now. I think the fundamental problem is just our industry decided we want to help make that happen. And I try, look, I think most VCs that I work with are good folks who try to pass things along. But even so, like, I get a company and that's not a fit for us. There's probably 50 people that would be the right folks to look at it that I don't know. And if I had a way to kind of make sure it got into the right market, I think you get in the right market for that visibility and make a big difference. So, maybe I'll revisit trying to get this thing going. I mean, I think it would be something that would be important. And VC is an important industry. I'm not by any stretch saying it's not an important thing. And I do think there's a skill set for folks that do at this stage. But I think our industry is going to change because of AI. And I do think at some point we need to find a way to open it up a lot more so it's efficient for companies. And get back to, we always talk about the roots of VC in a garage, but I always think about as the roots were VC was former operators who are just trying to help new operators succeed. And I think that's actually what we should get back to being, as opposed to sort of just a pure asset management business.
Brilliant. Add that to the list of topics for us when we meet in person. It's going to happen soon. I'll meet you in Austin.
Come down in the winter. Don't come down now.
Done. I'm going to pull us out of the rabbit hole. Okay. So curious, as you look for entrepreneurs to back, what has changed about the profile of the entrepreneur? What makes a great entrepreneur in the BuildGroup size in 2025 versus 2015?
Yeah, part of what I do, and this is specific to me. So, again, you asked the question, I don't know if I can give you for anybody, what's the right, to me, it's who I can work with. And, one of the first things I do when I sit down with an entrepreneur is I don't want to go through a pitch. I actually don't even want to know a lot of data about them. I typically say, okay, why don't you just talk to me about some of the issues you're dealing with right now? A strategy issue, operational issue, people issue. And then I sit there and talk through it with them. And I'm trying to get a good feel for how well we interact together. But what I often find is I learn a lot about how they are as a leader. If they're stuck on fundraising as their problem, I'm not going to be a good fit for them. If they start off with a people discussion, let me tell you about a challenge. I get real excited because in the end, companies are all about people and thinking through how to get the best out of people, get the right people in the right roles and get the best out of them. And so I get really excited when they start talking about people issues. Of course, I also like product and strategy and all that. But, I can always tell when someone's a good leader, when they start on the people side of things, has been my experience. So I try very hard to, before I even know much about the company, I try really hard to see, hey, do I feel like we have a good dynamic here where we're openly listening to each other? Because if we don't, it's not going to be good. If he feels like, or she feels like what they have to do is sell me because I'm their investor, or I feel like I'm giving them feedback and thoughts, but they're only listening because I'm an investor, that's probably not going to be something, super productive. So that's the first thing I do. The second thing that I've really, and again, I'm not sure it's a unique insight to us, but founders who are customers of their own problem, to me, are the best ones. Not people who spun out from a company to try to do something similar, but someone who literally was, I'll give you an example, Benefitfocus, who is the founder of a company of ours called Flowspace. They're a virtual 3PL, so they do logistics for emerging brands, call it, both direct to consumer and through the channel. He ran supply chain for the Honest Company. And so he's very familiar with these problems, which led him to kind of set this company up. Or Jake Heller, who was the CEO of Casetext, one of the first people to figure out how to use AI in the industry. And he said his objective was how to use AI on the front end of the business, not just on the back end, but how to use this to help lawyers be more effective at what they do in their jobs. Because he'd been a lawyer and he's like, this is ridiculous. This is, all this work is analysis is done by a human. There's no reason a machine couldn't do this. So to me, it's getting into situations where people have actually been a direct experience of the problem, I think is really important. The third thing is I do try to look for, we're investing in sort of companies that have at least 3 million, typically 5 million more in revenue. And so I do look for people that have built at least one or two other folks on the team. And it doesn't have to be people that report directly to them. I try to get a sense for, what type of folks they recruit in. How do they think about recruiting and building the right teams? Are they trying to recruit utility players? Are they trying to recruit specialists? Are they recruiting folks who are, ultimately going to be better than them? Those types of questions. But, none of this has really changed in the age of AI. I still look for kind of the same stuff. I think like anyone else, if you're working on a more technical product, it's great to have a technical founder. But, Jake Heller at Casetext, not technical, self-taught hacker. He just knew the problem really well. So those are what I look for. And what I tell folks is, when things are going really well, we're going to talk once a week, at least. There's not going to ever be an agenda. It's going to be like talking to a colleague on the team where you pick up the phone and we talk and we figure out what we can do. And you should be assigning me as much work as I would ask you to do as a board member. So in other words, if you have something you really want me to go work on, hey, Jim, I'd really like it if you went and thought about this market, or if you could go and think about what the right profile is for that role, I feel really good about getting into that. And for me, I want to be in the flow. I want to be a trusted partner because I think that's the only way I can really be good at exercising, judgment as an outsider on a team. And again, I have to remember, I don't run these things. I'm there to actually, in a lot of ways, be an employee. And I do try to balance that. There's director role, obviously, that you do on a board and you have to exercise. But in the end, the CEO runs the company, and I want to be there to help do a better job and be a force multiplier for them.
Take us through, you're talking to a lot of entrepreneurs, aspiring entrepreneurs who are hanging on your every word. And maybe take us through an example of like Jay from Casetext, when he did earn the right to pitch to you and your partners, whether it's Jay or someone else. An example of a pitch where you're like, we're investing. Like it's just obvious. What's different about those?
Yeah, I'll give you a couple of them. I'll even give you one that I passed on. So Jake was interesting because I met him for pancakes and he had been introduced to me, this is probably 6 years ago, by a mutual friend. And I walked in to sit down with him and he was furiously working away on his computer and I could tell he had been coding, that he wasn't just doing something else. So we talked for a little bit. And he was giving me the standard, kind of pitch about things. And I said to him, hey, Jake, what were you working on when I came in here? And he got animated and he turned it around and he goes, well, I've been working on, we've got this early AI effort. And to put some perspective on what Casetext did, they initially were think about it as a more modern version of Westlaw or LexisNexis for legal research. And the idea is he'd been collecting data on how lawyers did their research and building a workflow around that, right? So lots of really great data, 8 years of data on what lawyers did. And he had built an AI team and he was working on it. He showed me, well, look, as you're doing research, it starts pulling citations over, it starts suggesting language. This was, 4 years ago, 5 years ago. I mean, it was really rudimentary stuff. But I was like, this is exciting. I go, so where is this in your offering? He goes, we don't have it yet. He goes, but this is the whole focus of the company. And I was sold at that point because he just kind of struck me as the right, he's a really, really good leader and was very thoughtful about what he was trying to go do. When I met there's a company called Triple Lift in New York that ended up getting bought by Vista. And I met them early on, and these founders were incredible. They both, all the three founders had been 40 under 40 award winners in the ad space. So Triple Lift basically did a native ad placement in non-walled gardens. So think about when you're scrolling the New York Times or others, those ads look very native as a part of the actual film. That's what they did. That was their business. And they were early in the streaming race where you could insert ads like, the typical, you have a coffee cup, you can put Dunkin' on it, or you can put Starbucks or whatever you want. And they were early in that. And their numbers were phenomenal. And we had a really hard time getting around the fact they were an ad company. But they had me sold because they were great. Obviously, they had great credentials. They were in a really good market. They spent a lot of time with me explaining what they did. I watched the three of them interact. And I was like, these guys are really good at working together. Not because they always got along, because they would openly disagree right in front of me on issues, and not in a angry way, in a way that you want to see a team really trying to get to a good answer. And, I was very excited about that when we didn't pass. And it was one of the worst, everyone's got their board. That's one example. And then the other one I'd give you is our second investment in a company, the company I mentioned, Fix. The founder, ironically, met with us because he was a big fan of OpenStack, and he was a little bit older. And the first thing he said to me was, I want y'all's help because I need to exit the business, and I've got someone I like to bring on as president and help turn them into the CEO, but I want your help. And to my point earlier, when someone starts off right away with the people stuff, it gets really exciting for me. And then we talked about the business but we just got off on a good foot because he felt like a really good manager. He was really focused on the transition. That one, ironically, was the earliest business. When I invested in it, was only $1.5 million. So it didn't have a whole lot of signals, but the team was great. He was a great leader. When I walked in to see the company, that's the first thing he did. Said, I want you to come see the team. This is like 30 minutes into our meeting. I'm like, yeah, I'd love to. Walk me around, introduce me to people, told them to do everything about what they did, all that kind of stuff. It was just an exciting, for me, it was really excited when I see a leader like that. So, I don't know if there's some magic. I always tell people, like, if I have a superpower, I feel like I'm pretty good at read on the first meeting at seeing people. But a lot of it is because I watch how they interact with other people and what they ask about. So I tell people it's not that hard. I can't tell that they're necessarily that smart. I can't tell what their skills are beyond how they are as a people person. And in the end, all these companies, as much as we talk about the software and the AI, it's just people and knowing how to make them do what they do. Now, maybe that will change over time as we're starting to orchestrate AI SDRs and AI coding teams, but I still think people are a really important part of the leadership equation, obviously.
I love conversations like this with investors because whether or not you acknowledge it, you're hearing pitches that represent the innovation that we might, as let's say consumers, see come to market in a year or two, maybe even longer. What's one opportunity that maybe either you're starting to hear come up in pitches or where you think there's a big enough gap in the market that if you saw right combination of obviously team and product and maybe other circumstances, but if it was pitched to you, you'd fund it because you believe in the thesis of this technology needing to exist?
Yeah, I don't know if I have a super great insight into this one other than I spent, so again, I probably mapped the entire go-to-market. It's hard to say that because every day it's changing, but the go-to-market around kind of AI and what exists out there today. And I think what I would say is humans go through this phase, right? Let me take a step back. When you look at like how technology waves are adopted by humans, we always talk about watching kids and how they interact with it. And the reason we say that is because they're not burdened by the past, right? They're not burdened by the existing way of doing things. So I remember the moment I got my first iPad and I handed it to my then 3-year-old and they immediately knew how to use it. Like it's just logical, right, to them. And that's how they know it. And everything now is they're used to everything being kind of that same sort of setup. And I think about how we're using AI today, and I'm guilty of this. I'm trying to take AI, a new capability, fundamentally different thing, and I'm applying it against existing processes. Even what I just said to you, AI SDR, AI AE, AI, data enrichment at top of funnel. These are all kind of terms that exist on a legacy model, right? And I've started to see people experimenting with how to change those things on the go-to-market side of things. But I think that there is going to be a different unified go-to-market that's going to be built. And I've seen some interesting ones. The challenge with all of these businesses, agentic, is it's useless without data. I think most of these businesses are going to blow up because of that. But the smart ones are starting to recognize they have to attach themselves to a really good workflow and make that work. And I think that I've seen some really interesting ones in that space. And the example I will give you is I've been working really hard now on how to automate from top of funnel all the way through. So we already have automated PLG motions for people who don't need to talk to humans coming in, signing up, and going. The stuff we're trying to deal with is somewhere between that and enterprise, which requires a super high touch model. There's people that need some level of, call it, information interaction, right? And that usually involves demos and things like that. How do you really optimize that on a single platform? And the stuff I'm looking at now is still too handoff based. And so part of what I've been thinking about is how do you optimize this as a workflow so that you can actually manage a single thing? And for a customer, it feels very seamless. And so we've been playing around with a lot of that. So I have spent a lot of time as a customer of these things, and I'm starting to get a better idea of what I would fund now going forward if I looked at it. But to me, the reason you also want to have a workflow is in order to make this stuff work, to really optimize the customer experience, you need to have the data from all of that experience. Now, you could ride on top of other systems for it, but I think there's going to be a new thing that's going to capture all that data interaction and is going to learn about me from day one all the way through to when I'm using the product to really optimize my usage of the product, my interaction with the company, my upsell, my retention, all of those types of things. And that needs to get built. A lot of people are going to argue that exists in Salesforce or some of these other platforms today, but I don't think it does. And that's what I've been really trying to play around with.
It's also very consistent with the thesis that you described about Jake and case text.
Yeah.
Applied to a different workflow, different data mode.
Different workflow.
Yeah.
Yep.
Good insights. Jim, we're about out of time, even though we've covered none of the topics that we had planned, which is just great. But I am not letting you off the hot seat without answering one last important question for me. We've been talking to Jim as the investor, and I wanted to shift focuses. I'm genuinely curious to know about Jim as the entrepreneur. And Rackspace kind of famously went public in 2008. I think it was like August 2008. Interesting time to go. Yeah, interesting time to go public. I just want to know about your journey, not just related to the IPO. That's just a mark on the calendar, but the journey as you experienced it, and maybe how that led to your theses as an investor.
Yeah, Rackspace. I learned a few things at Rackspace that I think have been really powerful for me. First and foremost, Rackspace was my first time. How would I describe this? Not working with all type A people, like kind of with people of all different types and motivations. And it taught me a ton. I never have, you think about going from the likes of a Goldman Sachs or Harvard Business School, where I don't want to say everyone's perfect. They're all perfect on paper. They're all trying hard to be perfect on paper, I guess is the way I'd say it, to people that are different. And I learned very quickly that everyone's got super strengths and how to optimize for those. And that was a tremendous experience, not a non-technical experience, not a technical experience per se, but it was a great experience. The second thing was I got to go through some pretty interesting waves of transition, which I think really helps how I think about AI today. The first wave of that was simply the emerging SaaS model of the time, and starting to think about how you adjust your business to be like that. The second is being on the front end of sort of what's now known as multi-tenant cloud, and being a big part of that, not just the technology of that, but the changing business model, right? So, I think Rackspace went from selling, customers contracts for 3 years at a minimum of $5,000 a month to saying, well, now people are going to be buying, $400 a month cloud servers, right? It was we had to go through a whole lot of changes. So that was a really interesting experience. OpenStack was probably in some ways, really the most formative process for me, because I went through a process of launching a open source project and trying to bring that together for business objectives initially for us. Ironically, that ended up failing for Rackspace, but I think it's been tremendously successful in the world of open source. And, I got to watch up close the explosion of open source. And it sounds really funny now. But if you just go back to the late aughts, 2008, 2009, 2010, enterprise was still, not really huge open source adopters. Going through that process with really large companies and trying to think through technology adoption was really fascinating. And I think the same thing right now. And so, when I look at AI right now, I'm really interested to watch how the human AI interaction evolves. I think it's hard to prognosticate. And unlike most people, I'm a huge believer that AI is not going to replace people. I think, software's been automating people out of, quote unquote, automating them out of jobs for decades now. But amazingly, there's still plenty of jobs. I think AI is going to change how we interact and think about those things. But right now we're going through a weird phase where people are trying to figure out how to use it and get the best out of it. And we won't really know what it's going to look like for a few more years, I don't think.
Great insights. And by the way, Jim, and to land him as well, all of us who are early adopters of OpenStack owe you a debt of gratitude. And there's a whole new way of thinking about the cloud and about computing infrastructure. So nothing but an enormous win certainly from my vantage point.
Yeah, thank you. It was a lot of fun. I appreciate it. That community is really, they just joined the Linux Foundation,
I heard, yeah,
which I thought was a big moment as well. So no, it's a great community. And, one of the things I always think is so great about the world of open source is it's just awesome to have a ability to work cross walls with people to accomplish a goal. And even in the world of OpenStack, I remember it was probably the third or fourth year of it. I showed the top contributions to OpenStack by country, and the first was the US and the second was China. And I said, this is amazing. Like, where does this exist in the world? So open source has always been an interesting force for good. I do think open source is starting to have its impact on AI, which is great. Huge fan of what happened with DeepSeek. Llama is obviously a great thing for everyone, but the more we see go on in the world of open source with AI, I think the better for everybody as well. So be interesting to watch that evolve over time too.
Jim, this has been fascinating. I'm going to offer you an open invite. Come back and not only will we pick up where we left off, but maybe we'll cover some of the topics that we plan to discuss.
Sounds good, Dan. I appreciate it.
All right, Jim, excellent work. Great hanging out, and look forward to meeting in person sometime soon.
Sounds good. Thank you, Dan.
Well, that is all the time and more that we have on this for this week of AI and the future of work. But fear not. We, of course, are back next week with another fascinating guest. As always, I'm your host, Dan Tertian from PeopleBrain.